I'm joined now by Didier Cossin, Director of the Board Center at IMD and Professor of Finance. So Didier, can you tell us a little bit about the center and what exactly you do?
Yeah, with pleasure. What I do is actually work with boards around the world, Middle East, Asia, China, US, Europe, of course, on risk issues and overall the role of the board. So typically I work with maybe a sovereign wealth fund in the Middle East or a large bank in China, the largest bank in the world actually, on figuring out, whether leadership is doing the right risk decisions in these institutions. And what we find actually is challenges to decision making at the very top. Typically, the risks that we are foreseeing are not so much technical risks than decision making at CEO level and the poor management of CEOs, I would say, by the boards overall. So the issues that are rising go, in banking, in insurance, but also across industries, in oil and in other industries as well.
So earlier you were talking about challenges around values and working with boards on values, and could you elaborate on that point and what you exactly mean by that?
Sure. What I find is that the world has become so complex with dimensions of uncertainty and I would say ambiguity that go across macroeconomics, social issues, legal issues, political issues, that decision making now has of course to be based on knowledge, but knowledge is not enough. You have to have the right framework for the intuitive part of decision making. There is no way that the top level of an institution has knowledge of everything around the world that's pertinent to the decision being taken. And thus for that, what I look at is, the counterpart to knowledge in decision making, which we could call intuition. What is the basis to good intuition? And a good part of the knowledge to good intuition, I would say, is number one, psychological balance. Something that, was proven rather shaken in a Tony Hayward, for example, in his decision making around the BP crisis. But another dimension is values, and values in two dimensions. One is ethics, whether you correspond to the ethics and to the values of the society you're acting in, and the other one is integrity, the ability to make decisions that relate to your own values. So typically, if you look at Goldman Sachs today, I would say they have great, what we would call integrity in the sense of solidity, in the sense of, hanging on to their own values, but there is a fantastic disconnect of their values as an investment bank to the social values and the values of the societies that they are actually acting in. To me, this is a major risk. And this is a major risk that I believe any board should handle, which is not clearly done at today's date.
Yeah, we were chit-chatting earlier and you mentioned that you see cultural differences there, basically that boards in different cultures deal with this or are more or less receptive to this issue of values. Could you tell me a little bit more about that?
Yeah, from my work, it's just, this is just experiential,
personal experience,
Personal experience. What I see is that British company, US companies, and by the way, it's not only banking, it's also oil, etc., tend to be very much with a technical view of risk, with a strong base on modelization and very advanced techniques on that side, and typically a reliance on a chief risk officer and on the technical knowledge of risk. I see a different perspective in some European countries and even more in Asian countries. In China, in Singapore, much more valorization of the ethical side, much more valorization of the value side, maybe more lagging on the technical side, but certainly stronger actually at defining their own values. So if you take these two dimensions as complementary the factors of decision, which I believe they are, I think you cannot go with pure technique because technique is uncertain, and you cannot go only with intuition because knowledge is important as well. So what I'm finding is, basically Western companies and mostly British and US companies lagging on one dimension and Eastern companies lagging on the other.
Another topic that tickled my interest here was this distinction you made between risk and uncertainty. So I mean, as an asset pricer, I did some research on that, and when I think of the distinction between risk and uncertainty, I think of risk as being measurable, probabilistic risk, and uncertainty being the concept of not facing a situation in which I'm not even capable of measuring. So how do you, first, is that how you define these two terms, and two, what are the consequences or as far as the board decision making goes?
No, I think that's an excellent definition, actually. It's a good way to look at it. And then typically what happens is that the ambiguity that arises in today's world, and that is notably led by the human factor, right? By the behaviors that we cannot predict. So one big dimension of ambiguity and uncertainty compared to risk is the fact that the human decision, is affecting the numbers.
The unpredictable element.
Absolutely. And thus what you're looking at now is a good definition of the behaviors by themselves, and I would almost say a good understanding of the characters of those individuals that impact the reality of the firm, meaning typically the CEO, possibly the CEO team, depending on the institution, depending on how dominant the CEO is, and typically the board members and the role of the board overall. That's why I attached a lot of importance to the human work, the behavioral work, and the work on the role of the board within the institution, because each of these individuals is impacting the overall risk of the institution. To me, a BP or UBS example is not only a failure of the CEO or of the chairman, it's a failure of the overall board. The board may not have been as central in the media, but Tony Hayward, in my mind, is just the outcome of poor board decisions. And clearly, the extra risks that BP had to survive was the CEO risk, the leader's risk, and that typically was mismanaged by the board overall.
Great. Well, Didier, thank you very much.
Thank you.
It was an excellent presentation and very interesting discussion. Thank you.